Good morning. Today is Sunday, August 6th, 2023. And this is the weekly Bitcoin price forecast. So we're basically looking at where Bitcoin went in the past week and where it could potentially go in the future. So starting on the monthly chart, this is Bitcoin Tether, not Bitcoin USD. So this goes back to about 2017. But anyway, this whole year we have been going down, going down, going down. Actually, this whole year we've been going up. So this is the start of the year. This is all 2022. We've been going down. Got to the bottom here somewhere around November, December, and then January just took off like a rocket. February didn't do anything, kind of doji candle here. March took off like a rocket, and then we really, like, on a monthly basis, we've been going sideways for months. So let me see. You had was that April? May was down, June was up, and then July was down. So it's been up and down and up and down and up and down. It looks like August. I think August is going to be very much so an up month. Like there's a couple confluences that I'm seeing that could lead to that, but we'll talk about that in a second. On the weekly chart, you have basically this big swooping parabola, and I can probably put the images on now. The thing that I've been looking at lately is this parabola that's formed. It's like this big swooping curve that just goes up like this. And if you look at it right here, there's another parabola right here, big swooping curve. If you come over here, you can draw one, like not the whole parabola, but I guess if you draw it up to here, it'd be like that. There's a parabola that comes here and then just kind of swoops up that way. And there's, like, just these series of parabolas that swoop and swoop and swoop. Okay, so there's this one right here on the weekly chart that's been forming since, I don't know, we fell out of this parabola sometime in 2021, which makes sense, right? The top was in November of 21, and we've been coming down ever since. And the thing about parabolas is once you're at the top here, it comes down very fast, and then very fast right here. But once you get to the bottom right here, you see, like, this curve it gets less steep as it gets towards the bottom. So once you get to the bottom, you'll start seeing like this little ranging sideways motion. But the thing is, all it's doing is trying to get to the other side of this parabola. And then what'll happen is you see it's happening right now. We're going up, then we come back down, going up, coming back down, going up, coming back down, and so on and so forth. And it'll keep doing that. And now we're at the cool part to where it starts getting faster. In the same way, it's just the opposite of what happens over here. So, like, on the down slope here, we start out slow, then we go fast. When you're coming down, you start out fast, and then you get slower as you get to the bottom. So it's kind of interesting. One of the confluences that I'm looking at right now is the fact that we have the side of this parabola. So you see everything's contained. Everything is all within this parabola right here. So you have the outer wall of this parabola that's probably going to shoot it up. You also have the trend line that's been forming since January. So you can go up, come down, tap 1, tap 2, tap 3 of this trend line. And then you're probably going to have another shoot off that, could add to that. You can also look at the moving averages. So this is the 100 moving average, exponential moving average on the weekly chart. So you have, what is that? That's sitting at right about 27,900. So roughly 28,000. So let's put some lines here. Put 28,000 there. And then we'll change this to 28,000. Then I need a 29,000 as well. So you gotta look at these two key levels. So right now we're sitting right at 29,000. Again, we're on the weekly chart. 28,000. You can see with 28,000, it's a very psychological level because it's like it's a whole number, and it's kind of like the bottom of this support range too that we've been seeing coming. Actually, if you look at this range, 29,000 to about 30,000. Or 28,000 to about 30,000. You can see there are wicks here that it turned around. Wicks here, wicks here, wicks here. This is back in 2020. If you keep going back, like, this has been a very strong area for a long time. So since we got above it, it's probably going to turn into a support zone right here. So honestly, I mean, kind of early prediction, but we'll look at a couple things here. The daily chart. One thing that we look at on the daily chart is the fact that we haven't been able to get below 29,000. We haven't had a daily close below 29,000 since it shot up in June. So that's been a decent amount of time there. So you have, what is that, probably about a week and a half that has been trying to do it, but again, been unsuccessful. You see it's bouncing very nicely off this trend line. You got the moving average right here. And then again, if you come down to 28,000, you're going to hit all these things at once. So this is going to act as a major support zone, in my opinion. And it could bounce up to the other side very quickly. And I think that's going to be healthy, right? I would actually want it. It would actually be better for us to go ahead and just dump down to all this 28,000 level, because then the rocket up is going to be so much greater. So yeah, let's take another look at some of this. So like we are here at this point. There was something else I wanted to talk about. Oh yeah, I guess we can look at the length of time for like these different sideways ranges that we've had. So it's like we take a measurement tool, right, and we see how many days has this been. Let's go to the daily chart and do it that way. So if we come down, take a look. This was January. So let's say that we come right here. We take a look, and that is 57 days that it pretty much ranged. I mean, so again, we had this major run up. It's probably actually a little bit shorter than that. So, I mean, this is still part of the run up here. So I'll start it right here and then go over to here. So that was 49 days worth of sideways action there. Here we had, that was 90 days worth of sideways action. So double actually. And then finally we have this other sideways action that we've had. So, I mean, we had the run up here and then we came down another 45 days. So the first one was 45 days. This one was double. I mean, maybe if we're following that pattern, we see a shoot up, and then we have another 90 days of sideways action. I could see that. Something that we can be prepared for, something that we can look at. But yeah, no, I think that pattern is interesting, like 45, 90, and then 45 again. So again, we're kind of at the average. I think the 90 might have skewed it a little bit. So maybe we range for a couple more days, or a couple more weeks. That's possible, right? It's definitely possible. One thing that we could look at is, again, it's just so many confluences sitting right here. Like, again, you have the moving averages, you have the trend line. It's just, there's just so much economic energy. And the more that you wind yourself up, the more explosive the next move is. So again, you could have a very big explosive down move, and then like you could move up, or you could go in the opposite direction. But I mean, we can look at the Bollinger Bands too to see where those are at. I don't think it really makes too much sense to go too much lower than the daily chart at this point. So Bollinger Bands and the Bollinger Band width. Where are we at right now? On the daily chart, we are about as low as we've been, 0.04. And again, it's in a very tight range right now. We see these Bollinger Bands, they kind of expanded a little bit from here, because again, you did have a little bit more volatility coming into the market. But yeah, we're still at a very low level. So again, we draw that right there. We come over. When's the last time we had another very low volatility in January? But then again, you didn't have this until I think it was about 2020, or maybe 2016. I think it was 2020. Let's zoom out a little bit. Yeah, where was this? This was July of 2020. That we got that low again, and then what happened? Like in the middle of that, you started having explosive moves. Basically, it wasn't too long after that you started having like the really explosive moves. So like we were kind of right here, if you look at it, and if we measure to when it started getting, matter of fact, there was a run up. It was like a 40 to 50% run up, like right after this. So that's not bad. But then it's probably like another 90 days or so before you started seeing nothing but up. It's like up forever, and like you never look back type stuff. That's the type of movement that we're looking for. So I would venture to say in the next probably 100 days, we will start seeing crazy movements, to where like we just don't look back anymore. We don't really look back at what, people are like, oh, well, I hope it'll dip again. That's probably not going to happen at that point. We're in the period right now where this is about the last time you'll see a Bitcoin in the 20,000 range, probably ever, because the next time we have a major crash, it's going to crash down to six figures or something close. But yeah, man, this is like a definite. How much did this dip actually? It went on sale. It went on a 7% sale there from top to bottom. Multiple opportunities to get in there. This is the accumulation zone, and then it went on what was it? 20% discount, and people still didn't buy. It's incredible. And then what did we have here? That was a 22% dip. So again, you see like the dips are getting more and more shallow. So it's like 22%, 20%. and then what was it, like 7% before you probably have another rocket off. Like worst case, you'll get like a 10% pullback. But again, this is a discount. This is the place where like you buy Bitcoin if it's something that you're interested in, right? So I think that's all I got for right now. Not a whole lot to be talking about. And matter of fact, I think I do have one more thing. There is a zone right here that is pretty hard to bounce off of, in my opinion. So let's take a rectangle. If I can find the rectangle. Nope. There it is. Take a rectangle. Make a zone. Right here. And then just pull that over. That puts you right in this range too. So that's another area of support that you have here. So you have this major demand zone. You have all these things sitting right here. I think the next one that you could see potentially is about 28.5. So like the next kind of place where price rocketed off of before taking somewhat of a rest was here. So if we take that, pull it over, finagle this. And that kind of lines up right with that 28,000. So you'd have to go pretty deep into this zone right here before you cause the imbalance to be able to go back up. So I think we're in a good position. I think we're in a very good spot. I'm not worried. We're still in the period where Bitcoin's on a discount, but that will not be the case for long. But yeah, at this point, I don't really have too much else to talk about. The message of the day is we have a lot of confluence in this area. And the odds are that we could dump down, two scenarios, right? We could dump down and then come back explosively up, or we're just going to explode up without dumping down. Either way, we're going to explode to the upside. Nothing the SEC has been able to do in the past couple months has really shaken this belief or any of the other fear, uncertainty, and doubt that might be in the market right now. But again, when people are fearful, that is when it is your opportunity to buy. So again, take care. Have a great trading week. I will see y'all on the moon. And this has been Chris Talks Crypto. So take care.